Hello traders, the title of this video is how to use Fibonacci to pinpoint an overbought zone, part 2. If you have not watched part 1, you may do so before watching this part. In the previous video, I explained to traders that one can use Fibonacci to determine an overbought zone. All right, the overbought zone is the zone between the 150 and the 161% Fibonacci extension zone. I also explained to traders that a financial instrument can remain overbought for a long period of time. I have also explained to traders that when a financial instrument is overbought, it does not necessarily mean that the financial instrument is bearish. For instance, if a financial instrument is in overbought zone and the fundamentals are improving, the overbought condition will become irrelevant. I recommend to traders to watch the first video that we call how to use Fibonacci to pinpoint an overbought zone, part 1. In that video, I explained to traders the correct method one should employ, to sell a financial instrument that are in overbought zone. One will always combine the technical trading and the fundamental trading. Once we identify a financial instrument that is in overbought zone, we will go to Google Finance, we will check the balance sheet, we will perform what we call Google Finance Assist Test. All right, check our video, what is Google Finance Assist Test, at Joe Trio channel. We will perform the Google Finance Assist Test. If the financial instrument has failed, Google Finance Assist Test, and the fundamentals are becoming weak, we will implement what we call the trading triangle and the trading drill, using a valid trading system. In my case, I will use the TSTWS S008. So in order to understand all this, one should watch the first video that we call how to use Fibonacci to pinpoint an overbought zone, part 1. In this part, we will discuss, I will demonstrate to traders, everything else that I have discussed in the first part, Here we are looking at Nike. If you are involved in any sport activity, Nike, there are many sportwear made by Nike, a big American company. The epic is NKE, November Kilo Eco. That's the epic of Nike, all right? Nike is also listed on the Dow 30. The Dow Jones 30. All right. So here we have, I don't want to repeat myself, so I will just assume that you have already watched the first part. So I will just move on swiftly because I don't want the video to be too long. All right. This is part 2. Here we can see that this stock, Nike, went up from 1994 up to 97. Can you see on your chart? See here, it went up and a pullback. So you can see it went up from 1994 to 1997. We will use, Fibonacci extension. In order to draw the Fibonacci extension, because you see the price went up from here to here, to draw the Fibonacci extension, we will start where, the move has ended. So we start from here if you want to draw the Fibonacci extension, all right? If you were drawing a Fibonacci retracement, we will start where the move has started. So because we want to use Fibonacci extension, we will start drawing it from where the trend has ended. So here it is. Start from the ending point from here to the downside. What are we looking for? We are looking for the zone between the 150 and the 161% Fibonacci extension zone. So this is remember in the first video, the first condition, the price must be in a trending fast. The second condition, there should be a profit taken. All right? And the next condition is that the market should start buying the financial instrument for the second time. As you can see here, after the profit taking, the market decided to buy Nike, and the price start going up for the second time. The level of 150, though you cannot see clearly my drawing on this chart. Hold on a second, I'll try to show you that. Zoom into it. Okay, now you can see, okay? So the price went up from here to here, and then there was a profit taking, and the market decided to buy Nike at this point in time for the second time. So now we will highlight, okay, the 150 and the 161% Fibonacci extension zone. You can see these two lines. This is the overbought zone. Let's color them into orange. The zone between the 150 and the 161% Fibonacci extension zone is what we call the overbought zone. So at this point in time, you can see that this stock, Nike, reaches the overbought zone. But at this point in time, it was not completely bearish. It went up a little bit more, but it was in overbought zone. As I explained to you, we combine the fundamental and the technical analysis. So here, the price was in overbought zone, right, for the first time. You see that it went above the overbought zone, but quickly, okay, people challenge it after the trend line here is broken. The correct procedure is to check Google Finance, okay, check the financial, okay, check the economy news, and before one can sell. One can also use MACD 8349 to confirm a bearish divergence, but a divergence is a warning, all right? The overbought zone also is a warning, but one must always check the fundamentals if one wants to sell any financial instrument. So here, the price reached the overbought zone, went a little bit up, but you can see that traders sold it again. So in the first scenario, this is a demonstration of how to use, okay, Fibonacci to pinpoint overbought zone, and I want to show you what is happening here. So the price went up from here to here and pulled back, and people bought it for the second time, and it went to the overbought zone. As you can see, it went a little bit above it, but people sold it finally after this trend line here is broken. Okay? All right, so from here all the way up here to the overbought zone, people sold it. Let's check the next move. So after the price pulled back again, so this at this point in time we say it's overbought. As you can see for IBM, though it was overbought and the price pulled back, it was not completely bearish. At this point in time, the fundamentals were improving. You remember what I said to you? When a financial instrument reaches overbought zone, but the fundamentals are improving, okay, we are likely to see a new trend. So at this point in time, though traders sold it for a while, all right, it was just a profit taking. Because the fundamentals are improving, the price returned back to the overbought zone. But remember, if the fundamentals are improving and the price in overbought zone, the overbought condition becomes irrelevant. We can ignore it. All right, here it is. It pulled back. Fundamentals are improving. Price return back to the overbought zone. We can't afford to challenge it. Technical and fundamental, not technical alone. If you use this method with technical analysis alone, it's wrong. You must combine it with the fundamental. And this method is valid on the monthly chart. If you want to trade like a pro, use the monthly chart for this method. So as you can see, people sold it in overbought zone. It pulled back a little bit, price returned back to overbought zone. But as the fundamentals were improving, the price resumed a new trend. Look, again, it went up from here and then pulled back. So we have a different scenario again. So remember, previously we see a trend and then a profit taking. Now again, we have a new trend, which I'm going to color now in turquoise. So we have a new trend, which means the fundamentals were improving, okay? So we see a new trend this time from here to here, and again, a profit taking. What do we need to do? remember what we've done before. We will use again the Fibonacci extension tool. Yes or no? We'll apply it to the new trend. So you see the trend has started here and has ended here. Using the Fibonacci extension, we'll start it from the ending point to the starting point. Here it is. And then because there was a trend and there was a profit taking, we want to use Fibonacci to detect the overbought zone. Second time, this is the 150%. You can see 150 Fibonacci extension zone. I want to highlight the overbought zone. Okay, this is about how to use Fibonacci. So 161%, Fibonacci is the one on the top. I will color both lines again into orange. Remember that overbought does not mean sell. Overbought means it's a warning, it's a bearish warning. If the fundamentals are weak, if the warning is supported by the weakness in the fundamentals, we look for opportunity to sell. Look here, this is the overbought zone, a second overbought zone. This time, one will go to Google Finance, check the fundamental, and apply the trading drill and the trading triangle using the TSCWSY's usual a trading system. Here it is. It went down a little bit at overbought zone. With the Fibonacci extension 150 and the 161%, we can determine the overbought zone of a financial instrument. All right. So the price pullback now is starting. Okay, after. In fact, I forget one move. This session here, we did not talk about this session here. So I missed that session because I went straight away from here to here and the pullback. You see that the price went to the overbought zone and people sold it. Let's look at this session here. This session here. You can see in this session here, the price went up again. This session here, you can see it went up. Okay. So this is a pullback, profit taking, went to the overbought zone. But we can also start a new trend and say there was a trend, there was a profit taking, and we can apply again a Fibonacci extension to this session. And you can see clearly here, the overbought zone is right here again, 161% and 150. And that zone again, you can see that traders, okay, were selling this financial instrument. Do not use this method as a technical analysis alone. Combine it with the technical, with the fundamental. So when you see that the financial instrument is in overbought zone, now you go to Google Finance, okay, you analyze the balance sheet, you perform Google Sheet test, you check the economy news. Next, you use the trading triangle. All right, it's very difficult to sell financial instrument. Why? Because the natural progression of all financial instruments is to go up. So when you are about to sell any financial instrument, you must have fundamental reason why you should sell it. All right? So that's why it's so important to combine the technical and the fundamental. This is the end of this video about how to use a Fibonacci to pinpoint an overbought zone, part 2. In this video, I have demonstrated to you using Nike stock Epic November Kilo Eco listed on the Dow 30. I have demonstrated to you how one can use, okay, the Fibonacci to determine an overbought zone. As always, one must combine the technical analysis and the fundamentals. I hope you have learned something from this video also, and we put into use to make excellent swing trading decisions. We are the TSTW SYS 008 traders. Speak to you soon.